And of course, for setting the stage for our first session coming right up on financing the energy and transition activities in Southeast Asia. And of course, we are going to be proceeding now with the panel discussion. Once again, if you'd like to post any questions, you may use the Q&A function in session 1 on the agenda in the ACES app. Looking forward to seeing your participation as well as your questions. And now, it is my pleasure to invite the panelists on stage, starting with Audra Lowe, CEO, Clifford Capital. And of course, joining Audra is Ken Haig, Head, Energy and Environmental Policy, Asia Pacific and Japan, Amazon Web Services. We also have William Goh, Global Head of Renewable Energy, RGE. And we're joined by Frank Des Roises, Assistant Deputy Minister, Natural Resources, Canada. We're also honored to have with us Joffrey R. Payet, Assistant Secretary, Bureau of Energy Resources, Department of State, United States. We're also pleased to have with us Frederick Teo, Chief Executive Officer, Gen Zero. And of course, moderating this session is Ambassador Brian D. McFeeters, Senior Vice President and Regional Managing Director, U.S. ASEAN Business Council. Ambassador, please.
Hi, good to see you.
And of course, wonderful to see our distinguished panelists. And without further ado, I'd like to hand the time over to our ambassador. Ambassador, over to you.
Well, thank you very much. It's an honor to be part of this IRENA seminar, along with the Energy Agency of Energy Marketing Agency of Singapore. I've been enjoying the conference for 2 days now, maybe like many of you. We've heard a lot already, and I want to get right to business because we have a large and diverse panel. We have up here representatives from government, we have business, including on the demand side and sort of the supply side, and we have investors. So maybe if I can just kind of get the ball rolling with you, Mr. Goh. You are a resources company that has, I'm told, $35 billion in assets, 80,000 people. You've done stuff around the world. If I can just start with a question, I think we're all sort of struggling with how do we get this done? We all want the same thing. There's nobody here saying, oh, we don't need it. When you talk about financing renewable energy projects, what is the difference between financing renewable energy projects and regular projects, and what are some of the obstacles that maybe this panel can discuss? If I could start with that.
Thank you. Thank you for the kind introduction, and a very good afternoon to everyone. It's a privilege to be associated and be part of this IRENA high-level forum, and thanks to CES and EMA for the organizing this particular forum. Maybe just in response to your question, a little bit of context. Yes, the RGE Group, we are in the bioeconomy. We are in 3 major businesses. We are fully vertically integrated for each of these 3 businesses. First is on the pulp and paper, whereby we have sustainable plantations all the way down to our end products, which includes the pulp and paper, pharmaceutical packaging as well. And we're also into the dissolved pulp side, whereby we produce what we call sustainable fiber, which is an alternative to cotton in the form of viscose and rayon. I think Uniqlo being one of our customers, some of us will be familiar with. So that's our first business. The second business is on the palm side, whereby we produce the palm oil all the way down to our fatty acids and specialty products like the margarine, your shampoo. And in light of energy transition, we have also moved all the way down to green energy production. In this case here, the production of sustainable aviation fuel or SAF. Presently, we are constructing a plant, not very big, it's about 500,000 tons per annum, and that is in Spain with our JV partner, SEPSA. Our third energy group is in energy, where we're in transition energy in gas, and green energy in south, as I mentioned. And it's not difficult for the group to think about renewable energy. And just to share that for all our businesses, our key focus is to make sure that whatever we do, we adopt to what we call a 5 C's philosophy. And these C's being anything that we do has to be good for the community, good for the country, and very importantly, in the context of today, good for climate and good for the customer. Then only it'll be good for the company itself. Yeah. So just to share that context, and you asked the question around how we see financing. You're right. The different businesses lend themselves to different forms of financing. I think in the context of our other businesses, the end products, if you like, can be viewed as commodities, and therefore the market drives the prices. And the reality is that the commodities are fraught with possible volatility over cycles. So in a way, banks will view the financing of commodities differently from what we are talking here. The impression for financing when it comes to infrastructure, in this case here energy, is that it is something that is a lot more sustainable, a lot more predictable and long-term, and ability to ride through the economic cycles. While generally that is true, in the context of renewable energy, I would say that quite a few factors have to be put into play in the correct perspective in order for the financiers that some of the other panels like Audra would give a lot more expert perspective. But I would say that by and large, project financing in support of infrastructure like this cross-border project, which RGE with our joint venture partner Total Energy is, the financing we hope will be able to have a higher combination of debt to equity. And the reason for that is because energy in itself, typically with long-term power purchase agreements, provide for more predictable cash flows. And the banks in general will be more amenable to longer-term financing and also a certain higher level of debt equity ratio. I'll pause here to not talk in terms of how would the banks be comfortable to provide this kind of long-term higher leverage financing, because many of the factors are being discussed in the various forums here, and maybe we can discuss a bit more about that. But I would say that the 3 key pillars to enable project financing, I would think it as the 3 Ps, right? People, the public, as well as the private sectors. I think in this sense here, for the public side, the government policies and legal framework, it needs to be constructive, it needs to be clear, and it needs to be consistent. From the private sector standpoint, whether you're developers, or your supply chain, or you're even the financier, it is important to have a good understanding of this regulatory framework so that the understanding of the associated risks can be well understood, mitigated, so that the end borrower, which the lenders are going to lend to, will be comfortable with the risk that they're assuming. And finally, of course, for any project to proceed towards fruition, the revenue stream, in this case here, the end customers, will also wish to be able and be willing to enter in the longer-term power purchase agreement. And this will then underpin the long-term revenue profile of the project, and the lenders will then lend. So these are the broad factors I'll just share. Allow me to pause here, and you can continue, please. Thank you.
Thank you for putting those issues on the table. None of those are easy. What I might do is get a couple more business perspectives, and then we'll go to our government colleagues to solve all the problems. Is that fair enough, Assistant Secretary Pyatt, my former senior colleague? Maybe I can just turn to my neighbor, Frederick Teo, the CEO of Gen Zero, an investment platform that aims to accelerate decarbonization globally, Singapore-based. Mr. Goh laid out some basic issues. I know you're dealing with investment issues. Can you help those of us who are not in that game to understand it better?
Sure. I think that when it comes to investments in this space, we are basically trying to trade off or balance 5 different considerations as we think about our business approach. The first one is to understand the amount of capital that we actually have. So if you are engaging in the business of energy transition infrastructure, you need a lot of capital. Then the question really is, number two, what kind of returns are you actually looking to achieve? Now, clearly, if we are investing into clean tech solutions that are perhaps earlier stage, more interesting, you are likely over the long run with a diversified portfolio to have far higher returns. But if you are now engaging in the hard work of actually expanding infrastructure, you might be dealing with far lower returns, and therefore, what kind of capital pool would you be able to access? Hence, I totally agree, William, you do need to have quite a bit of debt. Third is that you need to think about the time frame in which you want to achieve this. So obviously, transition is actually the problem of painting on a painted canvas. You have to deal with the legacy issues of the investments that have gone before us, right? So in the case of Southeast Asia, for example, the average age of our coal-fired power plants is less than 15 years. And so they are not fully depreciated, not quite in the same way that in Europe and in America. So the ability to try to get these guys to actually shut down earlier is a much tougher challenge. So you're painting on a painted canvas, and therefore it is complicated by the dimension of time. How soon do we need to do this? And we need to do this soon enough for us to actually make an impact to our 2050 goals. The last two factors really is around the quality and the quantity of how we want to execute this transition and the impact that we want to achieve. Take, for example, if we're able to shut down coal-fired power plants and do that fairly soon, you begin to have a fairly large-scale impact. Now, we recently signed an MOU to try and pilot a test case of being able to achieve an early shutdown of a coal-fired power plant in the Philippines, right? Hopefully, we are able to start to do this by about 2030. Every year, that plant owned by ASEAN can contribute about 1.9 million tons of carbon and put that into the air. So if you stop that operation early, then every year you are avoiding about 1.9 million tons of carbon going into the atmosphere. That's worth doing. So that's quantity. But there is a question around the quality and the sense of integrity around that kind of project, right? So obviously there are debates. Do we actually pay coal plant owners to be able to shut down early? What does it mean to make them whole? Some of us might feel instinctively that, hey, why should we allow them to profit off early shutdown, right? And is that a problem? But if there are no economic incentives for them to shut down, they will continue. So we are caught in some of these trade-offs that we need to kind of like address. Now, a couple of other points I will quickly make around this, right? We need to have a very clear theory of change as to how we are able to execute transition in any region, in particular Southeast Asia, because it's complex. Why is it complex? We are dealing with quite a few countries with very, very diversified or very different stages of economic development. That means that your ability to pay for this transition is very different. So if we were to just come in with a view that says, no, everything has to stop now, we've got to transition 100% into renewables, that's going to be a very hard sell because governments and even corporates will have to deal with the fact that they have customers, they have electorates that require access to affordable energy. And you cannot be putting an impossible trade-off between them of economic development versus clean energy. So that's going to be a very hard sell. So that's one. Very different levels of economic development and therefore very different ability to pay. The second thing is about the fact that actually over the past 2-3 decades, this part of the world has experienced one of the highest rates of economic growth. And that also basically means that, I mentioned that coal plants are young, but it also means that there is a lot of lock-in to existing energy infrastructure to finance, to power their economic development. To be able to get them off this is going to be particularly hard. Third challenge that we face is that often we think about transition costs and only, and we go onto the net and we say, hey, today isn't solar or wind some of the cheapest ways of producing electricity? They are, if it's just about producing an electron. But the problem is that when we think about wanting to transit away from fossil fuel or thermal power, we are talking about like-for-like, apple-for-apple comparison, then you need dispatchable 24/7 energy. Then it means investing also in batteries. Mm-hmm. It means investing into grid infrastructure, and that raises the cost tremendously. So I think these are some of the complications of what we are looking at, but I think we do need to be brave. I will conclude on one point. We need to create proper economic incentives. So when we think about transition, one of the things that we are going to be piloting with this project in the Philippines is the use of transition credits as a way of being able to drive in carbon finance to make project sponsors whole. Now, with this particular issue around transition credits, there are still questions around the methodology, how we are going to be robustly able to pilot this. But I would say we can go into the weeds a little bit later, but we do need to keep an open mind as to how we can structure economic incentives to get people to do the right thing.
I really appreciate that. I think everybody does, particularly you really pointed out the real dilemma in terms of coal. I thought the Undersecretary of SCAP, who was here earlier, she gave a short talk yesterday where my summary of her short talk was Southeast Asia has too much coal and not enough grid. And I think, okay, that's a lot to think about. I think we need to keep in mind the high-level target that IRENA reminded us of, triple renewable energy and double efficiency by 2030. I think otherwise you can feel like the whole task is impossible. Let me just turn to maybe a different aspect. We have Ken Haig, a PhD, the head of energy and environmental policy for Asia Pacific and Japan for Amazon Web Service. My understanding from working with you, also a member of USABC, is you're basically trying to get renewable energy for all of AWS's facilities all over Asia. Not an easy task. How does this conference land with you, and how do these topics resonate with you?
Yeah, thanks. So I think you've got the whole of ecosystem here in terms of renewable energy providers, buyers, financiers, and so I guess I'm representing the corporate consumer perspective. Amazon as a whole has been the world's largest purchaser of renewable power around the world for the last 4 years running. Here in the Asia-Pacific region, we've enabled more than 2.2 gigawatts of new renewable capacity, over 83 projects across the Asia-Pacific and India region. So we're making progress, but we're still not anywhere close to where we need to be. We do have a goal we have a net zero carbon goal to get to the Paris Agreement targets of net zero carbon by 2040, so 10 years ahead of the Paris Agreement targets. And in terms of our Scope 2 emissions, which, as you can imagine, for a cloud service provider like us, that's the majority of our emissions, we really have found that after investing in efficiency to make sure we're using no more than we need to, purchasing renewable power has been the most accessible and scalable way to reduce our Scope 2 emissions. And in fact, if you look at Amazon's annual sustainability report for the last few years, you'll see that our overall emissions have decreased substantially, and even as our business has continued to grow, and a lot of that is coming because of our renewables purchases. You asked for how we can do more here in this part of the world. So I would point out that in many parts of the world where you have mature markets, and it was great to hear DG La Camara explain earlier that renewables remain throughout the world the most immediately scalable, available, and cost-effective carbon-free energy source. We've found the same to be true here in the Asia-Pacific region, even in Southeast Asia, if you can get access to those projects. I think that's one of the challenges that we found. So we're not the only corporate consumer out there looking for renewable power right now. We've got a lot of competition, not only within the cloud service provider space and data center operations space, but across different sectors, even amongst our suppliers. We're perversely competing for the same small pie of renewable power in many of the markets in which we work. And so I think what we've tried to do is work with others to expand that pie for everyone. So by joining efforts that like USABC has been doing to try and promote greater renewables procurement opportunities in the region, Asia Clean Energy Coalition, Clean Energy Coalition was another group we helped put together a couple of years back. And you may see SEMI here, the Semiconductor Manufacturing Association, also has been working to try and bring suppliers and buyers together to do more joint advocacy. I think there's three things I think that we're advocating on this front. So the first is corporate procurement, because it's been such a large driver of new investment around the world. If we were able to create options for renewables procurement here, that would unleash a lot of that buying power in this part of the world. So if you look at Wood Mackenzie, for example, they estimate that corporate investment in renewables is at least $1.3 trillion opportunity by 2030. Now the problem is, there are very few countries in which we can enter into a power purchase agreement, right, which is the typical structure by which we would purchase renewables, say, in markets like the US or in Europe. It's encouraging to see, for example, that Vietnam has now passed at least initial legislation to allow direct power purchase agreements there. We've yet to see that implemented, but it's a great first step. We've been very encouraged by what we're seeing with Malaysia, just across the border here from Singapore, in terms of enabling not only direct power purchase agreements, but also virtual PPAs there. And so there are encouraging signs, but throughout the region, it's still not possible to purchase power directly from an independent developer. And so that's something that would be a great unlock of that corporate investment opportunities if you enabled these procurement mechanisms like PPAs. I would say that the second point, it was great to hear Minister Tan and others referring to the opportunity created by the interconnection and the ASEAN power grid. I absolutely agree that there's a lot of sense in bringing the abundant renewable capacity in other parts of ASEAN to where the demand is most concentrated. I would say another thing that we as the corporate consumer's perspective are looking at is we need to enable not just the flow of power across borders, but also the environmental attributes from those projects. So for us to be able to invest in a power purchase agreement structure, say cross-border, and then have that power come to us towards our operations here in Singapore, we would need not only the power, but the renewable energy certificates from those projects to flow, because that's what we use for our carbon accounting. And we have to do so in a way that is third-party verifiable and independently reviewable, and then the RECs provide that for us. So having the power flow, but also the RECs. And then the last part I think that we also are encouraging is, I think Frederick mentioned this as well, is that investment in grid is absolutely required. One of the things actually we found from working on the Southeast Asia Green Economy Report with Gen Zero last year was that there's a lot of projects actually in the pipeline. It's true that there are not enough projects in the pipeline yet to even meet the targets that Southeast Asian countries have proposed, but there's something close to 200 gigawatts of projects that are stuck in permitting and approvals processes or can't get a connection to the grid. That grid interconnection queue is just getting longer and longer. And so resolving that and finding ways to accelerate the permitting, siting, and interconnection processes, I think would help to bring more supply online to help meet the increasing demand for renewables that's already there.
Thank you very much. We're painting a complex picture, and then we're gonna talk about resolving it in the second half. So let's continue with the painting the picture. Audra Lowe, you're the Group Head of Client Coverage and CEO of Clifford Capital Franchise, which catalyzes the growth of Singapore-based companies in overseas markets, according to the website. You're also investor and player in this field. You've heard a lot of ideas. What is your perspective, and how can you tell those of us who are not in that area what we need to know?
So good afternoon, everyone. It's a real pleasure to be here, so thank you for the kind invitation. So to be a little bit more specific, we are not an equity investor. We are actually a credit investor, and Clifford Capital is an infrastructure credit platform. So in other words, we are the leverage that William talks about. We are the debt provider and hopefully a more cost-effective source of capital that can enable many of these projects to happen, both in terms of raising the quantums of capital that is required to make these projects become a reality, but also to do so in a way that is that leads to much more affordable energy all around. The reason why debt makes a lot of sense is that ultimately the kind of debt we provide are typically underpinned by long-term cash flows. And long-term cash flows would come in the past historically from government offtake. But what's actually quite exciting about what's happening now is that we've got people like Amazon here as large-scale direct buyers of energy, and that has actually introduced another potential sort of credit underpinning for a lot of the projects that we're financing. So this morning, I was talking to Bloomberg, and they were asking, what do you think AI is going to do to the whole energy sector in Asia? And I think at first blush, you might be thinking, all these data centers, they're all competing for energy. It's just going to make electricity so much more costly for consumers as a whole. But on the other hand, with the emergence of a new significant large-scale direct buyer, they could actually be very well the unlock to make a lot of these projects happen, because with the long-term offtake that will presumably come, hopefully that means you then enable the lenders like ourselves to come through with long-dated financing, and that's actually what we are good at. At Clifford Capital, not only are we looking to mobilize our own balance sheet and our own capital for long-dated projects with long payback periods, but we're also hoping to mobilize a lot more institutional capital to come alongside us. So in Asia, historically, in the infrastructure sector, it's been predominantly supported by banks in terms of providing debt financing. So it's historically been banks, development financial institutions like the World Bank, ADB. And then, of course, there's export credit agencies and Exim banks that are essentially arms of various governments around the world. But that source of financing is just not enough in terms of the magnitude to support the billions and trillions that are needed to make the green transition happen, right? Because that entails, in Asia, 1.5 trillion. That's a number that I'm sure many of you have heard of before. So it does require private sector to come through. But how do we make private sector come through in a market like Asia, which is extremely fragmented? You've got different governments, different levels of development across all these countries. The government, no doubt, has to do their part, but I do think that we have to somehow find a way to make it easier for institutional capital to participate in projects in this region. So that's what our company is looking to do. Like I say, we mobilize and deploy our own capital. We've developed an infrastructure CLO or asset-backed security product that effectively buys loans that are structured by banks and recycles them into the capital, into the institutional market through collateralized loan notes. And through that, we introduce a new source of debt capital that can be utilized in this part of the world. So I think to make the green transition happen, it does require partnership from a whole host of actors, many of whom are represented here on this stage today, and we definitely look forward to getting more projects through the pipeline.
Thank you so much. There's a lot on the table here. I want to turn to Assistant Secretary Jeff Pyatt, the Assistant Secretary for Energy Resources, a very dynamic and growing bureau in the Department of State, former ambassador to Greece and Ukraine, a lot of experience. You're not an ASEAN official, obviously, you're a U.S. government official, but I feel like governments kind of have to take all this in and manage it and make decisions. I find that having recently left government, I'm sort of impatient. Like, why doesn't government resolve these problems? Even though I was on the other side of the table as of a year ago. So what do you take away? I mean, you've already participated in a number of sessions in this conference. Where is your head at, and what do you want us to know?
No, well, thanks, Brian. Thanks to Francesco and IRENA for having me here. And I actually think you've choreographed this quite effectively, because I'll start exactly where Audra left off, which is this is ultimately about private sector leadership and driving the private sector. I think government can act at the margins, and I'm delighted to be up here with my colleague to the north, Frank, and with a very strong alignment between what Ottawa and Washington are trying to accomplish. Let me flag 3 flagship State Department programs that are trying to tackle some of these problems. And it's great to be up here with Ken, because one that I'm proudest of is what ENR has led jointly with our partners at the Clean Energy Buyers Alliance. So a program called SETI, Clean Energy Demand Initiative, currently working with about 100 companies, including AWS and a lot of other global American firms, to consolidate demand signals for clean energy, and then to work with governments to highlight those demand signals and try to use that as a catalyst for the private sector in order to allow companies and developers to connect their resources with future demand. In this regard, I think it was really important. I want to put a spotlight on Ken's point about PPAs. And Ken talked about progress with Malaysia, with Vietnam. I would also single out some of the conversations we've been having with Thailand and their new UGT, Green Tariff Framework. So everybody is evolving in that direction. I will also flag a cautionary note, which is that I met yesterday with a cross-section of America's biggest technology companies active here in Southeast Asia. One of them pointed out, and I'm going to do some fact-checking on this when I get home, but that the marginal cost today of clean power in the United States is 10 times smaller, or that the cost is 10x in Asia for the same electron. And I think that suggests that there are still other economies that can be unveiled here in Southeast Asia. The other program that I would put a spotlight on is something that we've done jointly with our Japanese allies, JUMP, the Japan-US Mekong Partnership. A big part of the work that we have done together with Tokyo under that umbrella is technical assistance, working in particular with Cambodia, Laos DPR, Thailand, Vietnam, providing technical assistance and training focused on some of the specific challenges that we see to clean energy deployment in this part of the world. So that would include regulatory and legal frameworks for interconnection, which I think everybody agrees. And you asked about takeaways, Brian. One of the things that I heard from every Southeast Asia minister I talked to was, gee, we really need to get this interconnection thing right.
Yeah.
And the challenge is making the crosswalk from where we are today, having some specific examples with that, which then get to this big, ambitious vision of an ASEAN grid. That's a long way out. So coming up with the specific projects that we can focus on, that our ambassadors in the region can lean in on, and you know better than most what a powerful tool that can be. So very proud of what we're doing through the State Department's Power Sector Program. And then the last one I would flag, and it actually provides an opportunity to talk about all of the work that the State Department is doing, that my bureau, ENR, is leading on clean energy supply chains. Because even as we accelerate our clean energy infrastructure at home and abroad, it's absolutely essential that we do so in a way that does not further reinforce a dangerously high level of concentration of clean energy supply chains in one country. So having 90% plus of critical minerals processing, solar manufacturing, wind turbine manufacturing, battery cell manufacture concentrated in just one country is not sustainable. So we need to apply the same principle of diversification of sources that we have adhered to in the traditional energy sector, move that into the clean energy ecosystem. Southeast Asia has tremendous potential to be a significant contributor there. The Biden administration is doing a lot at home through our Inflation Reduction Act, but we're not going to do this alone. And if there's one message I can underline with everybody here in the audience today, is the Biden administration's very high priority on building the broadest possible international partnerships, both to address the climate crisis and make progress on our energy transition, but also to provide the material and infrastructure that we need to reach that goal. We're not going to do this based just on solar manufacturing in Georgia or in Texas in the United States. So we have to build these international partnerships, and we have to figure out how to scale. Because if you listen to what the engineers are telling us, we're going to need massively increased volumes of all these clean energy technologies, but also the inputs on the critical mineral side. Copper, right, nickel, zinc, lithium, cobalt, rare earths, 40 times the current supply of lithium, more copper than human beings have mined in all of history. And so there's massive, massive capital requirements that lie behind that as well. And that, finishes up with where I started, with looking back to Audra and Ken and everybody else here on the panel, that this is ultimately a problem that has to be solved by mobilizing private capital. The United States is going to show up. It's very significant that we have 2 assistant secretaries from state and DOE here at Singapore Energy Week. And I want to underline, as Secretary Blinken did 2 weeks ago when he was in Laos for the ASEAN-US Summit, that we are absolutely committed to our engagement here. And we recognize that these climate, energy transition, energy security issues are absolutely the center of what governments in the region are concerned about.
Thank you for that. Two quick comments before I call on Assistant Deputy Minister de Rossier. And that is, number one, I found, in my transition from the U.S. government, working with U.S. businesses, they really care about U.S. programs. I used to think it was probably like, they're probably, they're paying attention to 100 things. They really want to know what the U.S. government is doing in Southeast Asia. They want to align with it. They want to help with it. And the second point, I'm just proud that one of our companies called Delphos is leading a feasibility study regarding the interconnection between Indonesia and Malaysia. So that's, that'll eventually lead to real trading of electricity. Last but not least, Assistant Deputy Minister de Rossier, if I'm pronouncing your name right, you're Assistant Deputy Minister for Strategic Policy and Innovation. Prior to this, you were also Assistant Deputy Minister for Innovation and Energy Technology, so have been doing this for a while. You've heard everything. I won't try to give you a clever question. Just get your reaction to everything that's been said.
Yeah. Well, first allow me to register that I find this kind of gathering, where we bring together those different perspectives from private sector, financiers, corporate buyers, governments, to be really getting to the core of the issue we're trying to unlock, and having an audience that clearly is seized with it and is committed to find solution. For me, it gives me a sense of this is the right way, I feel, to provoke this discussion. All too often, we tend to meet as a subset in our respective domains, but I think this kind of event creates a great opportunity for dialogue. Second message, not here to lecture, listening to what my Singaporean government colleagues and ASEAN colleagues have been saying in recent days, I'm feeling quite confident that they've got a good handle on both vision, strategy, and implementation of it all. But happy to share, I guess, from our perspective, from Canada, some of the takeaways. And a bit like Jeffrey has done prior to arriving here, one of the great powers of government is convening power. It's amazing how many people can you gather up around shared issues. So I did that before coming in Canada and here in recent days. And we're quite active, actually, as an investor in the region. So people had a lot to say.
Okay.
And many of those themes I won't repeat from our earlier speakers who spoke to this very clearly. So we're involved in three different channels, I would say. The first one is to ADB World Bank, as it was earlier referenced. So we've provided consistent funding and will continue to do so in the future, trying to leverage as much as we can to make steady progress across the region. Through our export credit agency, Export Development Canada, who is sharply increasing their presence here in Singapore. They used to have a staff around 10 or so people. They're ramping it up to 40 to 50, and with the capital coming along with it. So they're looking to expand their portfolio and investment with local partners across the ASEAN region. But I agree with Madame's in terms of the upward potential is probably more so around the asset managers and the pension funds. We happen to have very well capitalized funds in Canada in this space. Organization that you probably be familiar, many of you, the Caisse de dépôt et placement, the Canada pension plans. They have many hundreds of billions of dollars to deploy, about 2.5 trillion all in all. And asset managers like Brookfield, who's got 1.5 or so trillion. It's one of the world's largest asset manager. So all those people are looking to deploy their monies into infrastructure and steady revenues. And energy and the region here of Southeast Asia is very high on their list. I've been spoken to them quite candidly over the past days. What they told me, to keep it real short, is the more we can address the issue around regulatory efficiency, clarity, transparency of process, and being able to identify those projects, they're more than happy to deploy capital. They've got plenty of money to deploy. So it's not the firepower that is missing, is having enough of those projects. Message number two that was conveyed is they need to be large enough. To Jeffrey's point around scale, for them to be worth their while, it's got to be chunky enough. So whether it's bringing together different bits into a given project that is large enough to meet their capital requirements, that's really something that they're looking to do as they're looking to deploy the billions. So I recognize that from an operator or from the host country perspective, it could be challenging, but that was the signal to share with me.
Thank you very much. You know, we're a large panel. We've taken up a lot of the allotted time. We have a few minutes. Maybe I could get from each of you, just sort of like, if there's one thing that you would like to have happen before we come back here next year. Presumably all of us will come back here next year. I try not to miss it. Maybe starting with you, just go down the row. I mean, just to kind of leave people with some optimism, I hope.
Okay.
if you can.
I will be very, very quick, but I think it's very hard to restrict it to one. So just three very quick suggestions.
Okay.
The first one is that we are all clear that for transition to happen and to have a clean energy future in Southeast Asia, we need to have early phase out of coal plants. Now, while we are actually able to get the demand signals from technology companies and all that to unlock some financing, it is also important that we think about how to incentivize the coal plants to shut down early, and for that, transition credits are important. So on that particular point, it is important for many of the biggest buyers of carbon credits in the world to actually have a purchasing criteria that will allow for them to actually purchase transition credits that will come from the early phase out of coal. I think that will be quite important. Secondly, unlocking that financing is critical, and for that, I think we need to have the right sustainable finance or green finance taxonomies from the governments to be able to enable banks to lend to projects that can, for example, promote the early phase out of coal. Because many of the banks are now a little bit hesitant about extending that financing, primarily because coal is seen as a dirty word. Third thing is also for us to actually expand our minds and think that while we are thinking about renewable energy and all that, after all, this is Energy Week, right? But that there is actually also a very strong nature component to achieving our outcomes. Because by being able to protect our natural ecosystem, protecting the forests, for example, here in Southeast Asia, it buys us time. Buys us time to fix our energy systems. And more importantly, natural resources, nature-based resources are also going to be a more renewable way for providing feedstock and energy inputs for us to power our economic development.
That's a lot. Let's try to get a quick suggestion from each of the other panelists. Please, sir.
Very quick. One would be progress in our SMR conversations with the governments in the region that have expressed interest. I'm especially hopeful about Singapore, which is always so aggressively pragmatic. And we closed the U.S.-Singapore 123 agreement in record time. I hope we can move from having the regulatory framework to having an agreement between our governments and hopefully having our companies making progress. And then the other bonus I would just add is progress on the interconnectors, which I think is something that is totally within the reach of governments, something that we will continue to support, and something that I'll go back and discuss with my colleagues at DFC, at the U.S. Export-Import Bank, because this is also an area that lends itself to the U.S. government putting some of our official resources behind it.
The feasibility study that I mentioned is funded by USTDA, so that's a great example.
Great.
Please, yeah.
If I were to emphasize maybe one thing is the power of personal relationships and connections. One of the key element of our strategy around our Indo-Pacific strategy is making sure we have more of those trade missions, the good old ways where people meet, connect, and really build that trust. And over time, of course, it goes beyond a short meeting. But in talking to the successful projects here from Singapore and the region, you could sense that their trust factor was there, and people were going back and forth between corporates on both sides. And once that connection is there, then you could do 1, 2, 3, 5, 10 projects. But you need that trust well established, and then you can scale.
Thank you. Mr. Goh, please. Sorry to rush you, but a little bit of time left.
I think very quickly, as a developer of renewable energy, and we are importing 1 gigawatt AC from Indonesia and Singapore, together with our partners, Total Energy. I think the key thing for us as developers is really to see traction in terms of progressing the project towards a state whereby you can commence construction. And key to that really is some of the things that's been mentioned before. One is in terms of the regulations around the REC 100, what is considered renewable energy certificate, so that customers, off-takers, like our Amazon friend here, can recognize and therefore be able and willing to purchase this electricity with the right renewable energy certificates. And so it's one part on the regulatory front. Associated with that is a recognition that this is a cross-border project, and therefore the collaboration of cross-border government, in this case here, MTI, EMA in Singapore, together with the supporting association like SIEW, on the one hand, working well with the Indonesian government to work towards the collaborative policies that will facilitate this import of electricity. And key among that would, of course, be the transmission cable, the alignment, and all the associated technicalities, which would be a very important element for any of these cross-border energy projects. For us as developer, we are committed to develop this project. I think rightly mentioned earlier that developers have to be strong and committed and be able and willing to commit the resources to develop the project so that the lenders can be comfortable to lend to the project. So we wish the government, the private sector, and ourselves as developer, we hope that we can continue to collaborate even closer together, and we have achieved quite a fair bit of traction with the support of the various agencies and government. And we hope that next year when we are here, we can share the key progress towards construction and commencement of these energy projects.
Thank you so much. Ken, yeah.
Don't want to undercount the impact that governments can have by setting enabling policies, right? So I talked about enabling power purchase agreements or renewable procurement options. I talked about RECs, cross-border transfer of RECs as well as power. Talked about speeding up grid interconnection and permitting and approvals processes. All of those are great examples, I think, of efforts that regional governments can get engaged on now. If you're looking for one promising example of how one government is starting to do this, India set a very ambitious target last year when they hosted the G20 of getting to 500 gigawatts of new carbon-free energy by 2030. They're about halfway there, but they've been very encouraging of getting private sector investment to help with that, and are trying to help address some of those very same hurdles that I just talked about here in Southeast Asia. So maybe some opportunity for collaboration there.
I like that. Let's set up an old-fashioned rivalry between ASEAN versus India. Why not, right? Audrey, you have the last word.
I'm going to have to double down and also say we need supportive policy from government. I think that's really the big unlock. There is a lot of money out there. There's a great deal of interest in infrastructure as an asset class, but we need to find ways to unlock this capital to be deployed into the region. And we always come back to the same thing. We need supportive regulatory frameworks. We need positive policies, whether this is in terms of direct PPAs or local content requirements, permitting. There's such a long list. So it's a plea to all the government representatives in this room, please go back and help us here put in place the right supportive policies. Thanks.
Thank you to the audience, to the organizers, and the panelists. Really, I think we really learned a lot up here. So thank you.
Great.
Thank you.
Hold on,
Thank you so much to our distinguished speakers for the engaging discussion. Let's have a group photo, shall we? Beautiful.